Stock market returns are never guaranteed. But when we do the research and analysis properly, like fundamental analysis, technical analysis, then there is a possibility of getting an edge in the market. But risk management cannot be ignored. Welcome back to DK Global Market Insights. This week, US markets kept climbing with S&P 500 up 0.94% and Nasdaq 100 was up by 0.43%. But here is something very interesting. A viewer asked if a Buffett indicator market cap to GDP is over 200%, how can the market still rise? That's a powerful question, and I'll give my answer to this very question at the end of this video. So stay with me because you don't want to miss it. Before that, let us quickly go through the week's global performance, sentiment dashboard, and key US market levels. Global and US market recap. This week, US markets closed higher again. S&P 500 up 0.94%, Nasdaq 100 up 0.43%, Dow Jones Industrial Average Index leading with 1.74% gain. Roundhill Ball Metaverse ETF jumped 2.76% and is now almost 18% higher after it has given a breakout of rounding bottom pattern in the month of June 25. Globally, we saw positive action. Europe's FTSE 100 was up by 0.47%. Germany's DAX was up by 0.81%. Asia was even stronger with Japan's Nikkei 225 was up by 3.73%. Hang Seng was up by 1.65% and India's Nifty 50 was up by 1.1%. Clearly, risk appetite is visible across the region. Sentiment dashboard. Now let us check the sentiment indicators. The VIX is at 15.08, showing extremely low volatility. The fear and greed index rose to 64, firmly in the greed zone. The put-call ratio is at 0.64, suggests traders are leaning bullish. And the S&P 500 is still trading well above its 125-day moving average, showing a strong momentum. So overall, sentiment is greedy but stable, with the bulls still in control. Macro highlights. On the macro side, a few important updates. Retail sales in July rose 0.5%, matching expectations, while excluding autos, they grew by 0.3%. The University of Michigan's sentiment index dropped to 58.6 from 61.7 last month, showing, of course, inflation worries. Wholesale prices jumped 0.9%, much more than expected, and importantly, Treasury yields climbed after this data. 10-year is at 4.32% and 30-year near 4.92%. This rising yield curve shows investors are demanding higher returns for long-term bonds. By the way, don't forget, we will also discuss the very interesting viewer question about Buffett's indicator being above 200% and why markets can still rise. I will cover it towards the end, so stay tuned. Commodities and crypto, quick look. Elsewhere, commodities showed weakness. Gold down 1.86%, silver down 0.83%, crude oil slipped by marginally by 0.33%. Crypto was mixed. Bitcoin fell by 1.59%, while Ethereum gained 3.41%. Charts. Now let us move to the technical analysis of S&P 500 and Nasdaq 100. I will mark the key support area, resistance area, and explain the trend and underlying price action so that you are well informed about S&P 500 and Nasdaq 100. This is the weekly price chart of S&P 500 index. The index finally this week closed at 6,449.8 and thus it was bullish by 0.94%. Look at the price action. This was the resistance area, massive downtrending move, then a V-shaped recovery. This worries me a little bit because there has been a breakout with a parabolic rise and there has not been any throwback to the neckline area of this index, which comes at around 6,100 level. So if that correction would have taken place, the things would have been different. Now the parabolically risen index indicate that the possibility of some correction cannot be ruled out. However, considering this yet another failure point or resistance point, so this area and the breakout candle, this inside bar candle median, that is 6,345 to 6,389 is the intermittent support area. But when we calculate and project the levels using the Fibonacci expansion tool and this breakout, the 61.8% expansion comes at around 6,900 and 100% expansion comes at 7,500. Now, when we look at the daily price chart, this trend line is very useful. Price has taken support here, taken support here, taken support here. So it has 3 touch points. So this is an established trend line indicating the dynamic support. And little above is EMA 21. So this quite hold good as a support area, what we have discussed, 6,345 to 6,389. So the price is looking quite overextended. See, the EMA 21 is here, price is trading somewhere here, and this trend line is here. So price is overextended. So mean reversion possibility cannot be ruled out. However, this demand zone has trend line as well and EMA 21, which is likely to act as a dynamic support. Why correction may not be deeper? If you see here higher highs structure, there was no divergence in momentum indicator, that is RSI. This is a weekly price chart of Nasdaq 100, which finally closed this week at 23,712.07, and thus it was bullish by 0.43%. We can already see the loss of upside momentum because this week's candle is a spinning top. Same kind of a structure, it although consolidated then gave a breakout. So this is a healthy sign, but it has not yet tested the neckline of this rounding pattern. So neckline comes at around 22,100 level, which can be considered as a major support. Now we are referring to the daily price chart for Nasdaq 100. This is the EMA 21, which is almost kissing the volume weighted moving average of 21 period. So this zone becomes a good support area. It is an intermittent support which has EMA 21 as well. Now there was a parabolic rise even in the recent time, and the loss of momentum can be seen considering the candlestick pattern that is emerging on the price chart based on the last 3 days price action. A small body candlestick pattern, lack of momentum is clearly visible on the price chart. This is the monthly price chart of Roundhill Ball Metaverse ETF. We had already discussed earlier regarding the formation of the rounding bottom pattern and a breakout over here. This ETF is looking quite strong. Now it is trading above the rising price channel in which it was trading earlier. So there has been a expansion in the price. In this week, this ETF has gone up by 2.76%, now currently trading at 18.96. But the breakout of this upper fiber of the rising channel, and then it has acted as a support. So overall trend is bullish, but here too the price is overextended, and this area is a good demand area which also coincide with EMA 21. But there is an intermittent support as well. Here see the resistance existed. So 18.2 to 18.45 is the intermittent support in Roundhill Ball Metaverse ETF. Don't go away. I will cover the viewer's question, how market can still go if the Buffett's indicator is above 200%. But before that, let us summarize the today's analysis. The trend for both S&P 500 and Nasdaq 100 is still bullish, supported by strong momentum and positive global cues. But the prices are looking a bit overextended. compared to the moving averages. This means we cannot rule out the possibility of some kind of mean reversion, which is a very normal thing in markup phase of the market. In simple words, even in the bullish trend, markets need to cool off and retest the levels before resuming higher. So keep watching key support zones and remember, trend is your friend, but respect mean reversion risk. Now, viewer comment response. Buffett indicator. I also want to quickly thank a viewer for thoughtful comment asking if the market cap to GDP, the Buffett indicator, is over 200%, how can markets keep rising? Very good question. In short, US companies earn a big share outside the US. So the market cap is global. GDP is domestic. Today's economy is intangible heavy. Tech, software, data, and continuous buybacks reduce supply and lift the valuations. This is my short explanation. This topic deserves a full, dedicated educational video, and I promise to bring it very, very soon. Don't forget to subscribe and hit the notification bell so you don't miss it. If you found this analysis useful, please like, share, and comment your views on whether this rally continues or we can see some short-term pullback. Learning never stops with DK Sinha. See you in the next video.